Hey everybody. Well, I thought we'd do a follow-up following this Fed day. As I'm recording this, the market closed just moments ago, the regular cash session. And we, of course, are now on the other side of the FOMC meeting. There are 8 of these every year. I guess this must have been the third one. So yay that we're done with this. And as you can see from the chart, it worked out okay because this is the ES and we just flatlined all night long. Just nothing. A little bit of dynamism here, just kind of meandering, wandering. And then the very widely expected 25 basis point announcement came out and it was just like, you could just draw a line at 4150 and it was just up a little, down a little, up a little, down a little, up a little, down a little, up a little. Boring. And then finally, at long last, we got a nice tumble right here. And so I saw some folks were saying, all I want is a red close in the NQ. Well, you got it. I bet you didn't think you'd get it, but you got it. So this was what they call a good day. The markets continue to behave very range-bound fashion. The all-important Fibonacci here did a yeoman's job of holding back prices. It was repelled very hard yesterday, and it fought right back, and it recaptured and went right back to this beautiful little Tina Revolution and I pointed this out, this head and shoulders pattern. So big plunge, retrace all the way to the neckline, and then down you go, pal, all the way back down. So this is very range-bound, as you can see, between the major Fibonacci there and this kind of silly little line I've put here, which is anchored to these lows. So this is what we've got to break out of, hopefully to the downside. If we can break to the downside, that truly opens up the prospect of this large move here. And as my gold and platinum folks know, there's every good reason to believe we'll go there based on the data in front of us. What will it take? Well, I guess given the right combination of news from Apple and the jobs report, that is Apple on Thursday afternoon after the close and the jobs report on Friday morning before the open, then maybe we could start rocking and rolling on Friday. I really don't know what Thursday's going to be like. Clearly, those are 2 giant data points that are not going to happen for the entirety of Thursday's session. So maybe it'll be relatively muted. Maybe the market will continue to digest what the Politburo just laid down. I don't know. What I do know is that I am more aggressively positioned now than I was at the start of the day. At the start of the day, I was 10.7% cash. Now I'm at like 1% cash. I basically have almost no buying power left at all. I've gone into 3 new short positions. And yeah, pretty heavily loaded on this. And so that's kind of where I see the ES presently. As far as some of the murkier items, here's the NQ. I guess if you squint just right, you could sort of call this a head and shoulders pattern too, which would suggest a move down perhaps to this Fibonacci. It's a wild ride, as you can see, just bonkers, just tremendous dynamism here, which, that's pretty cool because it was just a drag for most of the press conferences as we were bobbling around 4150 plus or minus half a point. It was just maddening. Yeah, this is a messier read than ES is. The small caps were close in the green today. They're still very range bound themselves. Way down here, this is basically the low for the year, back for the Silicon Valley Bank collapse. And up here, this is the top of the range. And we've been banging between these 2 levels. So we were so, shall I use the word, oversold yesterday. And I expressed this on yesterday's video. I was worried about a recovery here. So sure enough, it did climb somewhat. But this is still a pretty interesting looking pattern. It's just a little nerve-wracking because we are so near the lows of last year. Anything else to say? I don't know. Let's just look at a couple of charts for the hell of it, see what's out there. Gold had a pretty good looking day there. Yay. I guess volatility continues to be just grinding around down. It's amazing to get down to the 15 handle. a couple of days ago. So this is still, let me put it this way. We're not oversold. Let me put it another way. We're still really overbought. So the prospect of a lift from the teens to the 30s is not science fiction. And as I say, I'll be watching it with tremendous interest. Apple's kind of a boring company. This is a company that's valued in the trillions of dollars, and it has it grows at like 3% a year. Because everyone's got a freaking iPhone already. We don't have to replace them every 2 weeks. So it would be really nice to see some kind of fellows, we're sort of stopped growing completely news from Thursday, but that remains to be seen. So anyway, all in all, I'm delighted the Fed day is done. I hate these goddamn things, but I'm glad it's over. I'm very aggressively positioned, and Friday is going to be very interesting. Whether interesting bad or interesting good remains to be seen. Thanks for your attention. See you around.